Welcome, ladies and gentlemen. We are here at the offices of Zurich Invest, and with me now is Keith Neumeyer, the CEO of First Majestic Silver, one of the top primary silver producers in the world. And we want to get an update, of course. Keith, welcome.
Oh, thank you very much.
Yeah, great to have you here. Thanks for taking the time. Always highly appreciated. And because for us, it's always fantastic when we can talk to such a large producer like you are. First of all, how was 2017?
2017 was a bit of a challenging year. We've gone through very similar things that the entire mining sector have gone through, where the mines just simply have not had the investment necessary to maintain them at historic levels. So, 2016, we started reinvesting capital. We continued that. We spent $81 million in 2017 on investments in our different mines. Most of that going into development and obviously big exploration program. We drilled actually 156,000 meters of drilling in 2017.
That's a lot.
A lot. The biggest we've ever done.
Mostly underground?
Oh, well, on surface and underground combined. Okay. Yeah. So we just restated our reserves and resources just a couple of weeks ago, and we had a 14% increase in reserves and resources year over year.
Nice.
So the drilling's paying off, which is very important. Development takes a while to really start catching or causing increase in production, because you're building long underground tunnels, 1 or 2 kilometer long tunnels, and it takes a good year or two to build that type of infrastructure. So and that's really what's necessary to get the production back up to where the production was back in 2013, 2014. So 2017, we saw another year of lower production. So we've now seen 2015, 2016, 2017, each year with lower silver production, and it's directly related to development, development investments. But that's all changing. We've now put out our 2018 guidance. And we're guiding 15% increase in production in 2018 versus 2017.
So what finally, silver equivalent? How many ounces?
Yeah, it's about 18 million silver equivalent. 17, 18 million. And that's the first year in 4 years we've actually started to see growth. Q1, Q2, we'll see more or less flat production, but Q3, Q4, we're going to start to see increasing production.
Super.
Yeah. And so then, of course, sorry, you go ahead.
Yeah, so that means like with the 156,000 meters of drilling and the $81 million spent, so that's really for the future of the company, right? I mean, it's really,
absolutely.
Really to push it back to full throttle, right?
And in 2018, we're doing 180,000 meters of drilling. Even more than 2017.
Wow.
And so we're pretty excited about that. The reserves will keep going up. And then once the reserves start going up, then throughput increases, grade is better, and then the production goes up.
Of course.
And we were just in the process of acquiring our 7th mine, a company called Primero, which owns the San Dimas mine. San Dimas is a 10 million ounce producer, and it's been in production for 300 years. It's a beautiful mine, one of the most important silver gold mines there is in Mexico. And that'll be coming into our portfolio in the first couple of weeks of May. So we'll have 7 mines. So we're going to go from about a 17 million ounce producer to a 30 million silver equivalent ounce producer.
Wow, even bigger. What is it now? Ranked number, what is it? 2, 3 then in the world? Or what is that?
That particular mine?
Yeah. I mean, for you as a group.
Then. Oh, well, we're second largest right now in Mexico. So we're in the top 5 worldwide primary silver producers.
Exactly.
So this will just add to that.
Fantastic. How is the cost side when you are adding Primero? I mean, the AIC, let's say on all your 7 mines as an average, what do you think you can achieve 2018?
Yeah, the average for 2017 was about $13.50 an ounce.
Nice.
So a couple of mines are obviously cheaper than the others. That's the average. San Dimas is right now around 12 or 13, so it's right in line with our current costs. But we think we can actually improve it, substantially improve it. We're going to put new guidance out in June of this year. So look for that new guidance, and we're going to be looking to get the production below $10 an ounce. We think that's reasonable.
Well, that would be margin-wise sensational.
Yeah.
I mean, with 30 million ounces and let's assume $17 as an average, we talk about $200 million as a pre-tax profit.
Yeah, that's right. Yeah, and then when I say the $10, I'm meaning the San Dimas operation. So,
okay, good. But anyway, let's say
but on an average,
150 plus,
for sure,
something like that.
Yeah, yeah.
Wow, that's really fantastic.
Yeah.
When you did all the drillings, how did the grades develop? I mean, were they pretty continuous? Were they like the same you have found before, or they even got higher?
It's, there's a lot of properties,
yes.
so it's not a simple answer. There was two major discoveries. One discovery was at Santa Elena, and one discovery was at La Pria. The La Pria discovery was very timely because we've been really needing exploration success at La Pria, and we got it. And we hit a brand new structure, high grade, 300 grams average grade with a little bit of gold as well, which is very nice. La Pria has never really had a lot of gold, so it's going to be nice to get this into production. It's going to take us a year. So we now have to do that development, because once you discover this ore body, it takes you time to build the infrastructure to get access to it. So that's what we're doing in 2018. So we'll turn that into a producing area in 2019. Santa Elena, a beautiful discovery there. You're talking 10 grams gold equivalent, over 20 to 30 meter intersections. Cool. So it calculates out to about 40 million silver equivalent ounces that we've discovered so far, and that was just put out in our new resource update just a few weeks ago. So that was from grassroots exploration, so that was perfect, and we're still drilling there today. We think that area is even going to get bigger.
Wow, fantastic. So it looks like you're still very busy in 2018. It looks like the success continues. How has the, let's say, overall mine life improved through your drillings, and will improve hopefully then through the drillings in 2018?
Yeah, it's a good question, because mine life is related to investment, of course, and mine life has been dropping for the last 3 years. Yeah. And now with a 14% increase in our reserves, resources that we just put out, we saw the mine life increase by 2 to 3 years.
That's a lot.
Yeah. So more confidence in the resource. The lowest mine life mine that we would have right now is about 2 years, and the highest would be about 8 years. And so the average would be whatever.
Yeah, but as you are constantly drilling now, and you're rising your drill meters, I would say, also in the future, it's highly likely that you will increase it again, right?
Yeah, the mine life is not really, it's something that investors shouldn't really worry too much about. Yeah. Because if it's an open pit, it's a different situation. Right? You know exactly where the ore is, where it starts, where it stops. These are underground mines, so these veins go on for forever, and they're very deep, and it's just a matter of spending the money to drill them, and that's what it comes down to. If you don't have the money to drill, your mine life is going to stay the same or go down. Yeah. When you start drilling, your mine life goes up.
Absolutely. Let's go a little bit away from the company. Let's come to the silver market, because I want to use the opportunity when I have the chance to talk to such a large producer. Sure. What is your opinion about the silver market itself? What do you see it also like we see it? Something is cooking here. We have the feeling that we are in a situation like 2003, 2004, before it really started again.
Well, I can tell you I'm very frustrated. The silver price is obviously very important for us. Every dollar move in the silver price is $17 million change on our bottom line. So that's a lot of profit that can swing either direction. Yeah. So it's very important for us. The difference between $18 silver and $16 silver, it's a big number. So. But there's a perfect setup going on right now in the silver space. As you probably know, the hedge funds are record short right now, and the commercials are record long, which is quite unusual, because usually you see it the other way around. Yeah.
And the commercials win normally.
That's exactly the point. The commercials are the ones that normally make the money, and the hedge funds are the ones that normally lose the money. So the action in this price is pretty stable, and if you go back 3 years and look at the trading range, it's been a pretty darn tight trading range, and I think it's just waiting to explode higher.
Any price ideas you want to give us? I know it's hard to say, but can we see the good old 50 again?
Oh, for sure, $50 silver. Oh, without a doubt. putting a timeline on it is more challenging. But look, I'm a triple-digit silver guy. I'm on record calling for $130, $140, $150 silver. It sounds silly. It sounds, people call me a quack. Sometimes, they think, it's not based on anything, but it is actually based on mining. Because if you look at what we're mining as a global industry, we're mining for every 1 ounce of gold, we're only mining 9 ounces of silver. So silver is a lot rarer than people think it is. And, I said in my presentation today, that you can't mine a Bitcoin without silver. Right? You think about that for a second. So you can't mine a Bitcoin without silver. That's interesting. But you can't drive your electric vehicle without silver.
Yeah. Or RFID chips, logistics. It's not possible.
So many different things, and electric vehicle is just a computer on a stack of batteries. That computer consumes 3 times more silver than your conventional internal combustion car. So, and of course, many technologies. And I was just in New York at the Silver Institute last week, and then the mining sector produced less ounces in 2017 than they did in 2016. And in 2016, it was less than 2015. 2015 was less than 2014. We've had 3 consecutive years of dropping silver production worldwide, and consumption is still going up. If as a human race, if we expect to get off of oil and gas and go green and produce clean energy.
Solar, I mean.
Sure. Solar.
One of the biggest consumers, right? Yeah. And I heard also this week that even in normal combustion engines, every year are like 50 million ounces silver used, which is an amount. Honestly, I had no idea about. But for all the electronics. So from that perspective, you would say still supply shrinking, demand constantly rising. It's set up for the perfect storm, right?
We're in multi-year deficits, and the reason why it hasn't shown up in the price, I have no idea. Obviously there's, it's in the best interest of the banks, to keep the price stable. If you're Sony and you phoned up HSBC or JP Morgan and you want your 50 million ounces for your television production, you sign that agreement with JP Morgan or HSBC to get your 50 million ounces. I just use 50 million ounces as an example. I don't know how much they use to produce their televisions, but so all of a sudden now the banks are short that silver, and they're just sold to Sony. So if the silver price goes too high, then that's going to cost them money.
Yeah, but finally you have to deliver, because that is physical stuff.
Yeah, that's right.
On the one hand, you have the paper silver, which you can, let's call it, manipulate. I would say it like that. Yeah.
For sure.
But when it comes to physical, you have it or you don't have it.
Right.
And maybe also one thing I wanted to say with what you said with $150 silver, I think it's not so crazy to say, because if you would have asked somebody 5 years ago about cobalt, at $8,000 or $10,000 a ton, and today we are $95,000. This is the same. Yeah, isn't it?
Yeah, it is. So, and I was in the BMO conference in Florida last month. It's the largest institutional conference there is in the world for the mining sector, and everyone's talking about cobalt, nickel, copper, of course, as the green metals. But these metals wouldn't even be enabled to be green without silver, because all those technologies that these metals are being used in require silver in the same technology. And silver, for whatever reason, is not getting called a green metal, but it is in fact the greenest metal.
Yeah, because you really need it.
For sure.
Great. Keith, thank you very much. That was a fantastic update and insight into the markets also. All the best with the company. And I would say drill the 180,000 meters and show us some more good numbers, and good luck with Primero, of course.
Yes. Well, thanks very much, and great seeing you again.
Great. Thank you. Yeah, ladies and gentlemen, it was Keith Neumeyer, the CEO of First Majestic Silver. And you heard it. Good things and big things are going on with the company. 2017 was a very good year for them. So far, 156,000 meters drilled. They enlarged their resources and reserves by 14%, which gives almost 2 to 3 year, again, more average mine life, which is a fantastic number, honestly. This year, they want to drill 180,000 meters. And as said, last year, they invested $81 million. So probably this year, it's a bit more than that. And yeah, silver set up for the perfect storm. As Keith mentioned, the supply is going down, meaning the mine production, but the demand is growing and growing and growing. And yeah, actually silver is the greenest metal for the green renewables technologies. So check out the company. Thanks for watching us. Bye-bye from Zurich.